Daily Fiscal Pulse for the 8th of July, 2026. We're looking at Wednesday's trading session today. Keep in mind these numbers are final, not real time, as we work through the data. Let's start with what's moving markets right now. The market's attention is split across multiple themes with no clear dominant narrative at the moment. You're seeing coverage about these 10 states are best positioned to land AI data center deals despite rising public opposition getting real traction in headlines. And that's clearly influencing how traders are positioning. That said, narratives can shift on a dime. The money flows themselves tend to give us a clearer picture. Wednesday brought some real spending activity. The net transfer came in at $36.1 billion, driven primarily by household transfers which accounted for $33.8 billion of that total. That's solid liquidity hitting the system. What's interesting is how ES is behaving relative to the flow picture. ES futures ended at 7,527, maintaining ground above the 20-day moving average of 7,486. The 20-day range is about 340 points wide. Despite fiscal headwinds, the index is holding its own. Zooming out reveals something telling about recent momentum. Government spending's 5-day average is running at $14.2 billion daily. Stack that against the 20-day average sitting near $7.5 billion per day, and you get a sense of how much extra cash has been flowing through. That's more money moving into households and ultimately feeding into markets. The year-over-year picture tells its own story. Fiscal year-to-date spending totals $1,262.1 billion, representing roughly a 5% decline versus the same window last year. That's a meaningful pullback in fiscal support and it has real implications for overall system liquidity. From a positioning angle, the fiscal backdrop isn't pointing us toward a clear advantage right now. Our conditions gauge is reading -14. Here's what the historical record actually shows though. We've encountered similar setups plenty of times, and despite tighter liquidity conditions, the S&P has still managed to average around plus 0.8% over the following month. Liquidity and market direction don't move in lockstep. Markets can and regularly do push higher regardless. Now let's consider where positioning sits currently. Leveraged funds continue adding long exposure while margin debt is sitting in the 100th percentile. That's notably elevated. Historically, when we see levels like that, they function more as a caution sign than a bullish indicator. We're also tracking 2 consecutive sessions of rising fiscal transfers. Our analysis shows that pattern has historically preceded near-term strength in ES. Nothing's guaranteed, but it's a dynamic we monitor carefully. Several events on the horizon could reshape the picture. The SSA payment cycle lands on the 15th of July, which is the third Wednesday of the month, and that typically influences short-term flows. Around the 15th of August is when the next substantial Treasury coupon interest payment window opens up. Right now the fiscal data isn't delivering a strong signal in either direction. The flows that are scheduled ahead will likely be the key to whether that changes. That's where we stand heading into the next session.